Hello and welcome to The Exchange. I'm your host, Rob Cox. Today we're talking about shifts in the global economy. What does the future hold and which countries will come out on top? I have with me Ruchir Sharma, author of Breakout Nations and head of emerging market equities and global macro at Morgan Stanley Investment. Okay, I read your book the other day. I'll tell you how. I was heading to Vietnam, to Hanoi, for a reporting assignment, and someone said, you've got to read this chapter on Vietnam before you go. And I have to say, I was hooked. What are the recipes that make nations break out? Because I think that's sort of the underlying lesson one draws from your vignettes around the world.
Yes, Rob, but I think there are 2 points I want to make here. One, that it covers a lot of countries, and there really is no magic bullet.
Right.
I mean, as you say, it's a recipe. It's a number of factors that come together.
Right. Some communist nations, some democratic nations,
That's right.
The results are often mixed.
There is some sort of common stuff, and it's been written about a lot, like rule of law, etc. But the whole idea of this book was to offer an on-the-ground perspective, which is like, I'm traveling to these various countries, what are you seeing? Because it's easy to sit on a desk with Excel spreadsheets and come up with stuff, but that's pretty boring the way that I see it. So you've got to travel to these countries. Now, what are the two metrics I use for evaluating the countries that are going to do well this decade?
Right.
The two metrics I used were, one, in terms of expectation. I think expectations are really key, and this is the problem with Vietnam as well. That people thought that Vietnam was going to be the next China. They thought its growth rates were going to be that like
So our
of
expectations,
China.
outsiders' expectations about what can actually be accomplished in a nation.
Yes, right. Outsiders and even the people within that country. So take the example of India also just now. India's growth rate is currently slowing down to 5.5%, 6% or so for this year. Now you would say 5.5%, 6% is not bad given the rest of the world is only growing at 2% or so. But that's a really disappointing outcome. That feels like a mini recession in India today. If you go to India today, it's a lot of gloom. So I think that's one very important metric. What are expectations of people within that country and also of outsiders? And the second metric is in terms of per capita income. China is growing at 5, 6%, and the US is only growing at 2 or 3%. The fact of the matter is that when your base is lower, it's much easier to grow at a rapid pace.
Yes, when people are making $3,000 on a per capita basis versus whatever, $45,000, a 10% growth doesn't feel the same way as a 2% growth.
Exactly, and I think this is true also of within emerging markets. So one of the central sort of themes of this book is the fact that you can't talk about emerging markets in the simplistic, homogeneous sense, that all these markets are the same, they're all set to sort of grow very rapidly, each one of them is going to converge with the developed world. Here's history for you. There are 180 economies in the world today tracked by the IMF, only 35 are developed. Everyone else is an emerging market, and many of them have been emerging for decades. The likes of Brazil, that it always seems that Brazil is just about to converge with the developed world. It has one good decade and then stumbles for another 2 decades or so.
And of course, there are some submerging markets on the developed list. But let's think about some of the successes, some of the ones that you target, you think have got the recipe correct for the next 10 years. Who are they?
Well, the one that I speak about has been the gold medalist of growth already. That this is one country which has grown consistently for 4 to 5 decades in a row, and I think could continue to do well, and you were in Asia, is South Korea. Is at the cutting edge of manufacturing. It's the only economy in the world that I know where manufacturing as a share of its GDP is increasing at such a high per capita income.
So South Korea, at the end of the day, is a relatively small nation, so consumption alone can't necessarily bring the economy up to the greater levels, can it?
Well, it's not as small as it seems. I mean, like, it's $1 trillion economy, so that's not as small as it looks.
True.
But yeah, but in terms of, you're right, that it really draws a lot from the international strength. But the key is that whenever there's a boom somewhere in the world, the Koreans are at the center of it. Whether it's the tech boom of 99, 2000, about Korea's tech prowess.
Of course, they must have learned from the won crisis. I mean, that must have also informed their views about how to restructure their economy for the future.
That a lot of these economies in East Asia, such as Korea, Indonesia, had very hard landings. There was no real welfare state to try and sort of protect.
No, your chapter on Indonesia I found it frightening to think about. They had something like an 80% decline in certain business,
wiped out. In terms of the entire banking sector was wiped out. Their currency was nearly wiped out. And look at where Indonesia is today.
It's so hot now.
Exactly, and it's like staged a massive comeback. So sometimes, like, having a hard landing for an economy is almost good because it clears the deck up for you to carry out some reforms and to start clean. So therefore, Indonesia is another country that I speak about as a breakout nation.
Where does China stand on your?
Well, I'm sort of mixed about China. I'm obviously very impressed by what they've achieved. Anybody has to be. 30 years of growth of 10% year after year, and the economic cycle since 98 has been very compressed in that the economy has not slipped below a growth rate of 8% since 1998. So it's really eliminated the business cycle in some sense.
Right.
But the problem now about China is that it's a victim of its own success. That China, after having grown so fast, so rapidly, and without much of a business cycle to speak about in the past decade or so, nobody expects China to slip up. And my concern is that this year could be the first year that China grows at below 8, and will be lucky to even do 7%.
And there are important ramifications to that. I mean, we are looking in October at the 18th Party Congress. This is the first real transition to power without a sort of anointment from Mao Zedong or one of his successors. I mean, if you have subpar growth, I mean, are you worried about unrest? Are you worried that we actually have a bigger problem on our hands than just a soft landing or even a hard landing?
That's not my base case,
Yeah.
because my entire case about China is that the law of large numbers are catching up with China, that the economy is maturing, it's a truly middle-income country now, and at these sort of levels of per capita income, all the other economic stars in the world in the past, whether it's Japan in the 1970s.
The middle-income trap, as you
No,
call it.
middle-income trap is much more serious of a
Right.
problem, because that basically means that you stop converging with the developed world.
Okay.
The term that I come up here in the book is something called middle-income deceleration,
Right.
which is like a first-order slowdown. It's not a complete secession.
Convergence doesn't end.
Exactly.
It just
slows down. Exactly. And I think that's where China is today, which is what's going to feel disappointing for people who are betting on China to, continue growing at 8%, and all these fancy forecasts out there that how by 2025 China will be the world's largest economy. And that's the other sort of point I make in the book, that I really have a poor opinion of this long-term forecasting. The old rule of forecasting used to be that you make as many forecasts as possible and you remind people when you're right.
Right.
But now the new rule of forecasting is that you forecast so far out in the future that neither you nor I will know. My sort of assessment of how the economies are going to do is typically about the next 3 to 5 years, at best a decade. I think beyond that, we just can't be held accountable for the forecast. So what's the point of giving
And
those?
who are the ones that we should be worried about?
I'm concerned about the commodity producing economies.
Brazil, say.
Yeah, Brazil, Russia as well. These are economies that benefited enormously from the commodity boom of the past decade. But now as China slows some, as commodity supply increases, and as these countries have spent their entire windfall already and are now hooked to seeing ever-rising commodity prices, these are the places which could face a bit of a disappointment.
Right.
So these are two economies that I'm concerned about, and the growth rates are slowing down. Brazil's growth rate this year is going to be less than that of the US.
That's extraordinary.
Exactly, for a country with a per capita income which is 1/4 the level of the US. Russia's growth rate has already slowed down to half the pace of the past decade. So these are sort of economies which are already beginning to struggle a bit, even though commodity prices haven't fallen that much. Imagine what happens if commodity prices go down 10-20% over the next 6 months or so. Then I think that these economies could be quite shocked by that development.
Right. Ruchir, this is fascinating stuff. Thank you very much for coming in.
I enjoyed this.
I'm Rob Cox. Join us again for another episode of The Exchange.